Hey, Mike here. There's a saying that one of the greatest gifts you can give somebody is to show them how to fish. You just don't throw fish at someone, but show them how to find their own fish. And today I'm going to show you exactly how I find stocks. And before I show you, you got to know the obvious. And I don't find them by buying magazines and reading them. I don't read Barron's. I don't turn on CNBC and write down some pics someone's yelling at me on the TV about. I don't chase stories, and I don't buy something because it's shot up in value and there's some great article about that. I've got my own criteria that I specifically look for to find the best stocks to invest in. And what I'm doing when I say I'm finding stocks, I'm essentially searching for stocks that fit that criteria. And it is the most profitable criteria I've ever found in all the years I've been investing. If you've got my book, Strategic Stock Trading, you know I call it the twofold formula. And I call it that because it combines fundamental valuation metrics with technicals, which are the charts. It's very simple. When it comes to fundamentals, what you want is to pay a good price. Fundamentals is a word bandying around quite a lot, and unfortunately most people don't have any clear idea of what they really are and mean, and they think that fundamentals is something sexy, something that's got a good story, something they simply like or familiar with. And no, fundamentals means you know the price you're paying for a stock because it represents a company with earnings and future growth, and you know you're paying a decent price for that or a cheap price. So there's three main things I look at. PEG ratios, which are used to find stocks that have high earnings growth at a cheap price. I'm not someone that just buys a stock because it has high earnings growth, because what ends up happening with those story stocks is when the growth one day slows down, the stocks crash because they're overvalued. If you get in at something early because it's at a low price and valuations are cheap, then it's like you're essentially getting an acorn and planting a tree instead of jumping on the top of a branch and hoping it'll hold you up. Another thing I look at, of course, is dividends, and then simple stuff like the book value of a stock. But basically, I'm looking for cheaply valued stocks. And then I look at the charts. And I'm looking for stocks that are in a bullish sector, or the market as a whole that they're in is extremely bullish, one or the other. I look at the relative strength, meaning how is the stock performing in comparison to the rest of the stock market in its sector, and how's the sector performing. The sector is key. I would invest only in the best sectors, whether that's an individual sector in the stock market or a world market as a whole. And then I look for stocks that have made a big gain recently, 50%, sometimes 100%, because that shows they're action stocks. And then they dip or they pause for 7 to 14 days to create a great entry point. And then when they break out, they tend to pop and go up a similar amount that they did last time. And do I trade or hold these stocks? That depends on the stage, the sector it's in, and the stock is in itself. Are we in something that's gone up for years and are late in a stage 2 bull market, or somewhere potentially in a stage 3 market? If that's the case, then I consider this stock as a trade, something to hold for a few days, possibly even a few hours. But if we're early in a bull market or at the very end of a stage 1, then I look at this as an investment that I can hold for several years. And honestly, those are the type of stocks I'm much more interested in buying. Not only can you hold them for a long time, but they tend to actually go up the most after you buy them. How do I find these stocks? That's the question, right? And that's what I'm going to show you. I'm going to show you the stock screen I use, and then I'm going to show you the software I use to go through thousands of stocks a week. But let's look at the simple stock screen. All right. it's on Yahoo Finance, and to get to it, I've got to go to Google search. Yahoo Finance used to have the stock screen right off of its home page, but they don't anymore because so few people, unfortunately, I believe they took it off. They made it hard to find. I think they took it off the front page because almost no one does any real stock scanning and research for themselves, which is a shame. They just rely on the television. So here we are, and I can screen all the stocks in the United States stock market by all these metrics, and I just keep things really simple. I look for I look at the PEG ratio, which is the 5-year expected earnings growth the analysts are estimated divided by the price. So the P ratio just measures the earnings for this year. The PEG ratio looks out for 5 years. It enables me to find stocks that are going to support high earnings growth and are very, very cheaply valued. One is considered fair value and 0.5 cheap. In fact, if you get the classic book One Up on Wall Street and read it, you'll discover that this is the main thing that the author tells you to do. This is also, by the way, what John Templeton used, his main metric to pick out the stocks that basically turned him into a billionaire. Then I click Find Stocks. Now, I don't know why Yahoo Finance has an unfortunate tendency to also actually have negative PEG ratios. So I got to skip. I sort by PEG and you get these negatives. You don't want the negatives. That means earnings are shrinking. So I got to skip through there. Skip a couple until I get to numbers basically 0.01 to 0.5. But generally speaking, there'll be about 300 stocks like this every week. They don't really change that often, and I just see what they are. And I get a feel for them. I'll recognize the sectors they're in. If they're in an interesting sector that I want, that I'm really focused on, then it becomes a real screaming buy candidate for me. And you get Canadian stocks on here. Here's a shipping stock. Well, it's negative right now. But anyway, that's the main thing that I use for screening stocks. Now, the second thing I do is I use TC2000. That's what you're staring at right now. Stock technical analysis software. There is a free version of it. I pay for this, but you can get a free version at freestockcharts.com. But I use the pay version. It has some more features to it. Now, I don't use or have some formula that picks out stocks for me using TC2000. I look through literally well over 1,000 charts a week to find only the best candidates that I'm interested in. But this real beauty of TC2000 is it allows you to easily see what's going on in all the sectors in the market. It breaks the market up into 239 sectors, and you can quickly go through them simply by pressing the space bar. See, this is called what they call a watch list. And the type of stocks I really like, I've mentioned IRE to you before, but IRE is a stock that came out. This was a stage 1 base it was coming out of. And it popped from, like 40% here from November to December. Remember that big 2-step I told you about? And then it paused, and I bought on that pause, and then it broke out. It was a pop, pause, pop, and go. And I actually sold it up here in February. But it was a great stock, and it met all the criteria of my twofold formula. And this is the most profitable chart pattern I've ever found. It's when a stock is emerging from a stage 1 base, has a big gain, and then pauses for 7 to 14 days. That pause is a great entry point, low risk. You know where you can put the stop, usually below the 50-day or 150-day moving average, and then you can you tend to make big gains on the next move. And if you want to become an investor, which nowadays is what I like to do, you can hold without ever really worrying about it coming back down and taking all your gains out, because you got in at the optimal price in a great trade. Well, so right now the mining sector is something I'm focused on, and it's having the same sort of chart pattern. This is GDX, the ETF for gold mining stocks. You can see it went from $22 up to $26. It's in a stage 1 base with resistance right on it, basically right below 27. And we're pausing. We've paused already for about 7 days, and now we're in a position where we could break out this week or next week or any moment, really. And if we break out above 27, that's essentially the launch of a brand new bull market. And guess what? There are lots and lots of individual stocks in the sector in the same exact position, which is really a magical thing to find. So if we look at Newmont Mining, you can see, how it's trading. But the neat thing about TC2000 is you can look at the whole sector, 190 mining stocks to go through. And not only do we have those 190 mining stocks, but on the Canadian Stock Exchange, there's about 1,000 mining stocks, junior mining and exploration stocks and bigger stocks on the exchange. And I'm going through them about every week now, and collecting them and buying them and so forth. And TC2000 enables me to quickly go through them. Clicking the space bar, I can see the charts. When I see one that looks interesting, I write it down, and then I go and examine, the company, the valuation metrics, who the management is, and on and on and on. And I'll just show you 2 stocks that caught my eye. These are in the United States. 2 silver stocks, EXK Endeavor Silver. You can see how it's just had this big move up, over 50%. It's now pausing. Really, I don't own it yet, but I'm watching it very closely. I may, in fact, buy it today. I'm going to think about that. But look at it lining up. Another one is Fortuna Silver, and you can actually see how it's surged up, and it's pausing in a position where it could break out. It's already broken through its stage 1 base at 450. It's one of the leading silver mining stocks right now. I'm not going to go through any more of them for you, but I'm going to tell you that, like I was saying before, there's no magic formula. There's no button I can sit here and press and spit out stocks for me. I've got to do the work every week of looking through all the sectors, looking through, well over 1,000 charts a week, and doing that enables me to see what's going on inside the stock market, see where the rotation in the sectors is in. If you recall back in May, the market, this is the Russell 2000. Well, I'll show you Facebook. Facebook had a big pullback, and there's a lot of talk on television how the high flyers were finished and you need to rotate into other stocks and so forth, and there's a big correction in a lot of stuff. Here's the Russell 2000, which was acting weak. But in May, I said I think the market's actually going to rally, because what I was seeing was basing going on in a lot of the sectors that have fallen the most. And I said, we're going to rally into June and July and probably top out in July. But the whole reason I was able to make that call, and some people said it was like as if I was psychic or something, but no. The reason I was able to make that call was because I was looking at all the sectors inside the stock market using this watch list right here, the 239 sectors. And they were basically, every single one of them was basing in May, and that made it easy for me to think, well, we're going to hold up and rally. And we have. And now we're in July, and yeah, who knows what the stock market's going to do. But I don't really care, because what I'm seeing here is a stage 1 base in mining stocks that I think is going to break out no matter what the stock market does. And it's not simply GDX, it's not simply GDXJ, but so many of the stocks are lined up in the same position, and a lot of volume has kicked into them in the past 6 weeks, which is fascinating when you consider the fact that so much volume has basically gone out of the U.S. stock market. It really dissipated, but that hasn't happened in the mining stocks. So here's the thing. Like I said, this is how I do it. That's simple Yahoo Finance stock screener, TC2000, and it takes work. I spend, this is my life, and what I do for the members in the Power Investor Group who now are positioned in lots of mining stocks, benefiting from what's already happened in them in the past 6 weeks, is every week, all the research I do, I do a research report every week. I tell people what I think's going on in the market, what trends have my attention, what I'm doing with my investments, how I'm adapting and adjusting to things, where are the great opportunities. But I also show you, or will show you when you get in, what is the best single stock, or the best single trade I've found after all this research I've done. I do the work for the members, so they don't need to go through all this work every week, and they don't have to spend time chasing after trading robots, magic buttons that don't work. It's work that works, and I do it. And I suggest, I'm opening up the Power Investor Service this week. It's going to close out Thursday. This is a summer opening. I'm opening up now. I had people actually tell me, don't do it now because you won't get many people because everyone's on vacation. But no, this is the moment because what's lining up in these gold stocks, I can't wait another week or two because stocks are popping. Some are already breaking out, and I really can't wait until everyone comes back from vacation. You take advantage of it because you're here. I can't help it if some people aren't here, but most people, I think, are aware of how important this stuff I put out is, and I can tell a lot of people are clicking my emails and stuff because they know what's going on. So anyway, click below this video. It's all the details for the Power Investor Service, and join it and be a part of the group, and be talking to you later.